On Tuesday, the US dollar's exchange rates against the Iraqi dinar showed a modest downward move across both Baghdad and Erbil trading floors, according to a market survey by Shafak news agency. The central Al-Khaifa and Al-Harithia stock exchanges in Baghdad closed with the dollar at 142,900 dinars per $100, down from 143,050 earlier in the morning. Local currency shops in Baghdad were quoting 144,000 IQD for selling and 142,000 IQD for buying per $100. In Erbil, dealers posted 142,850 IQD sell and 142,750 IQD buy per $100. These are small moves on the surface, but they occur against a backdrop of policy pressure, oil price sensitivity, and heavy dollar demand that make even fractional shifts noteworthy for businesses and households across Iraq. This article expands that market snapshot into a full-picture, long-form analysis. We explain the mechanics behind daily IQD/USD headline numbers, place the recent moves in historical and policy context. Examine what small fluctuations mean for real economic actors from importers to ordinary savers, and outline plausible near-term scenarios for the exchange rate and macro stability. Along the way, we draw on central bank data, international institution assessments, and on-the-ground reporting to explain why a change measured in a few hundred dinars per $100 matters in a country still shaped by oil, subsidies, and remittance flows. Iraq's FX market has two interlocking layers that matter for the everyday price of dollars. First, there is the official wholesale layer. The central exchanges in Baghdad often reported as Al-Khaifa and Al-Harithia and the Central Bank of Iraq (CBI), where banks and institutional counterparties access dollar liquidity and where formal interbank and bank-to-bank transactions largely price out. The CBI also sets and publishes official rules and occasionally conducts FX sales or interventions. The CBI's published operating framework, including rules for maximum bank selling prices and official reference mechanics, anchors how banks trade and report prices. Second, there is the retail parallel layer. Thousands of independent currency exchange shops, money changers, and informal dealers across Baghdad, Erbil, and other cities. These outlets set buying and selling spreads that incorporate immediate cash needs, risk premiums, and local supply demand. Because Iraq is heavily cash-oriented, the rates quoted on shop windows, the numbers consumers and small importers see, can differ from official interbank close rates by several hundred IQD per $100. Those retail spreads are the ones reported in daily surveys and the ones cited above.